Good evening. This is the Elliott Wave daily update for the S&P 500 and the NASDAQ 100 for Thursday, May the 16th, 2024. This morning's economic data had very little impact. We did get one good move, and then they just kind of took it all back, and we continued on. But both the S&P and the NASDAQ did manage to move to an additional new high within the sequence. A couple of things. It does keep that larger sequence in a bullish time frame, and a little bit longer term expectations remain for additional highs to be put in before the whole sequence is complete. So I continue to look at it as if we completed a minor third wave at the end of March. And the April expiration, we reached the low of minor wave 4, and we are in a minor fifth wave as we now, 1 month later, as we confront the May expiration, which is tomorrow. So I'm starting here on the S&P, and I'm on the 4-hour chart, and I'm going to open it up because, again, my area of concern is this move. And this move started on April the 19th. And so it is just a continuation, and that is where I've marked minor wave 5 to begin, or a fifth wave up to begin. Inside that fifth wave are going to be 5 waves of minute degree, 1, 2, and as of today, I have put that third up here. I will go into that in just a moment. So there would still be an outlook for a fourth wave and then a fifth wave. And that fifth wave still would project likely up into here. Once minute wave 4 is complete, I will be able to connect via the Fibonacci extensions, but we're looking at minute wave 5 as to how it relates to minute wave 1, with the most common Fibonacci level associated with each other is equality, where wave 5 would be equal in length to wave 1. And of the same degree. Okay, so that would be put into place, and that would fill likely all these little spots to give us an idea. Now, if indeed we are within a fourth wave down, then what can we expect? And for that, I've run the fibs from the bottom of minute wave 2 to what I'm labeling as the top. But I'm going to bring this down before I get into the fibs, because I want to show how this all did end up counting out. I'm going to drop down to the hourly chart. And again, we're just going to look basically here because I'm still 1, 2, 3, 4. And the fourth wave still is in place. And that just takes us back to Tuesday's PPI number. And that reactionary low put in that fourth wave. And now we're going up again in 5. So what does that look like? Then I go down to the 15-minute chart, which is right here. There's that reactionary low from Tuesday. And then we start to count again. And basically, I've got 1, 2, and then 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 of 3. And this is coming off as a 4. Now, being that I'm looking for that minute fifth wave, I'm down counting minuet fifth wave to finish the minute third wave. So I need to be able to count 5 in here. And I'm going 1, 2, and then I probably have the 3 up to here. The 4, I'll give it down to there because it was a good low. If anything, then maybe here. And here's wave 5. Down again, that was just today. And it was pretty steady. And this is on a 15-minute basis straight up. And we reached that, and then we started to come back off in likely 1, 2, 3, 4, 5, A, B maybe, or 1, 2, 3, A, B, 1, 2, 3, 4, 5. A couple of ways to kind of view what we've achieved so far in this little bit of a downwards move. Now, so if we're within this, then I think what we got going on is going back out again. We've got our fourth wave. And I need to just kind of clean that up a little bit. And it would be the minute, by the way. So it's a minute fourth wave. And let's go get that all cleaned up. I actually don't need that high to show. 2, 3, 6, 5, 6, 1, 8. Oop, I want that. Get that, and that gone. I'm just cleaning up the chart with the extraneous, all the different levels, because it tends to get too many lines on the chart. And so what I have is just the basic ones that we're looking for within this minute. So this is minute 3 up here, and we're looking for minute wave 4. Now, the couple of reasons why if indeed we were going to be considering that we might have the possibility of one additional move up to complete minute wave 3, this decision was made as we broke there. And we did pretty steadily, and we came right back down as if we're going to continue overnight and into tomorrow because we're going to be back below 5,300 for expiration. That's kind of the first thought that came to my mind. Now, what we can do is just include all of this conversation about that fourth wave going back out to the hourly chart. Here we have coming down in a minute 4. Here we have the calculations go from the bottom of minute wave 2 up to the top of minute wave 3. We have 0.236 at 52.72, 0.382 at 52.24. And then the 50% should it slide further, would be at 51.85. Now, Elliott told us that the fourth wave will find its support or end point within the price territory of the fourth wave of one lesser degree. Okay, so I'm counting a minute fourth wave. That's what I'm counting down. And so where's it going to likely come in? Within the price territory of the fourth wave of one lesser degree. That's this one, the minuet. And here it is right here. So that's the box that we could draw that we're looking for the market to come in. But we have the Fibonacci wrapped right around it. Basically, the 236 and 382. The first two in this case, the most popular, 0.382, fits very cleanly with this low, this reactionary low that we had on Tuesday. And that's at 52.24, this low being all the way down to 52.17. So we've got the zone to where we should come in. We're now going to be looking to see, how does the market want to come off? Is it going to come off in 5? Is it going to come off in 3? Ultimately 3, but how is it starting? What does it look like? It kind of looks like it could be AB, we're in a deeper C wave, which would take us right into this territory. We're looking for below here, by the way. Or it's just 1, 2, 1, 2, 3, 4, and then we got a 5, and that's the 3, and then we got a 4 and a 5. That's the A, and then we got a 4 and a 5, and an A, B, and a C, excuse me. And that takes us down into here. So it's still in development, a little hard to tell. You know, when you're down even on a smaller time frame chart, you're going to get inside of all of this and realizing that, Elliott, it's building blocks. So in other words, this produces the larger wave, which produces the larger wave as we go out in time. So what we're looking for, again, back on the hourly chart, we are looking for an ABC structure down to bring us into this zone right down here. Now, having said that, we need to be able to count either an ABC or its components. The A wave can be 5 or 3. If I'm taking a look at the 15-minute chart, I think it's going to come out as 5. And we have a third wave inside of it that is extending. These are all normal occurrences within the structures that are in progress. So we can count and just kind of look and go like, well, okay, from here, our next support comes in at 53.07, which was that fib support, which was resistance, now should be support. And it actually goes 53.0875 down to probably 5,300. Now, versus the S&P itself, I think it goes much lower. Or it kind of stops here, because breaking down below here, we're looking for the SPX, which, by the way, closed at just below that. People are going to get angry with me, but don't get angry, because this is important for some and maybe not for you. Just let it go. So 5,300 kind of does remain right now. I don't know what the difference is. I have not seen the numbers yet from today as applicable. But that's kind of that, in the SPX and some other markets, it is a place where there's a lot of calls that are short. So, and the majority of them expire tomorrow. So to bring it down below on expiration, would be something that those dealers that had to sell all those calls wouldn't mind seeing. So in any case, that's an expiration discussion, and I'll save that for later. So that will be support, but we're looking for it to come down and get inside that box. But that would be an A, a B, and a C, and the C wave ends up down in here. Okay, so we're still in the A wave. We get a bounce, and then we come back down, and we end up inside here for wave 4, minute wave 4. That's about as far as I'm going to go, because once I have that minute wave 4, then I'll be able to go and take it back and use minute wave 1 and run it over to wherever the 4 comes in. And then we get what we should have for minute wave 5. And once again, yes, folks, the way that this is being counted, I am counting it as 5 waves up, but it's a minor on both sides. This would be minor 5 to complete intermediate wave C to complete primary wave B. The alternate would suggest that it's still a 5-wave structure up, but maybe it's just finishing intermediate wave 3. And then we have an intermediate 4th wave and an intermediate 5th wave outside of all that, which would then highly suggest that the S&P, along with the basis of the other markets, it would be IWM, it would be the Russell, it would be the NASDAQ, all are in a different count than what I've been using. And we're not going to the long term. I'm going to stick to what I got right in front. But there's still, as I said, strong probability that this is a stronger up move, and it's shown more on the daily and the weekly. That particular move, all of the fundamentals fundamentals of the market, in terms of the technical fundamentals. Sorry, that's the word I was looking for. Moving averages, how the market, how the wave patterns are forming, continue to suggest that there is additional highs yet to be made. And whether there's that alternate count, which is even higher levels versus the preferred count I have, can cover us pretty much. Now that we're above 1.382, it starts to lean away from that a little bit, but I'd have to go back and check how much leeway does the analyst give. I don't believe Elliott actually went into any detail there, and it depends on who you talk to about what we would still consider it to be an irregular B wave before it switches and it's becoming more of that 5th wave, a larger 5th wave up. Anyway, back to the case here. Everything's still in good alignment for the market to continue to go up. So what we got going on tomorrow is exactly that. This high I'm going to mark as complete. That's at today's high, which was 53.49. We have the possibility this is just a smaller 4th wave, right? So this 5th is not done yet, and that would take us from here. And maybe this is only 3, and then we go to 4. We're doing down now. We come back to 5,300, stop, turn, and go, and end up back at 53.64 before we begin that larger minute wave 4 correction, which I've just neatly laid out. It would continue to suggest this area, because these 2 points won't change. It would just be this 5th wave would change because it extends one more time. So the 3 and 4 remain in place. And whether we get up here, we're still looking for this type of a move. In fact, it might shift a little bit, but again, that previous 4th wave stays right where it is. So that would be the levels. All right, so moving averages, everything looking good. Here is where the kicker is. Look at the RSI beginning to show, okay, we were a little bit overbought. Now we got to relieve that. Let's see what we do. And it's also pointing pretty hard down. So it is suggesting, at least the 4-hour, that we have more downside to do. Over in the NASDAQ, our pal, the NASDAQ, the beast, which continues to see fair movement in AI stocks and in the chip stocks that are going to support artificial intelligence. So again, here we are. I'm going to go right to there because that the count is that I'm taking it from the high of minor wave 3. There's minor wave 4 down there. And so again, minor fifth wave up. Within it, we're going to have 5 waves of minute degree, of which we have 1, 2, and yep, there is a 3. It's hidden right there. It's in the same color as this resistance point. And I've run a bunch of other already into it. I've taken down some of the fibs, and I'm hiding them actually. Like let's go here. And these actually go with, if this is the minute third wave, they would go the minute fourth. And once again, looky, it's there we have the fourth wave of one previous, the previous fourth wave of one lesser degree. Wow. Is still right inside the box, 0.236 down to 0.382. So both the S&P and the NASDAQ line up perfectly with their threes and with their previous fourth waves. And indeed, if this is the minute third wave high that we saw today, in the NASDAQ, it came out at 18,000, 672. Oh, come on. Today's high, wow, was 18,760.75. Sorry about that. Sometimes it's hard to find it all jammed up into there. So, and there was a resistance point just above that at 68 or 69. And so that gave me a little bit more that we likely could have completed it. We're on the 4-hour chart showing you where these levels are, what the count is. Well, let's talk about two things on a possibility, which I didn't talk about in the S&P, but it actually could be. And this is the alternate view actually for both markets, because right now we got the same deal. We have an ABC down and we're counting 5 waves up. So we're both in the exact same plot, so to speak, on what should be taking place. Of course, different levels numerically. But here we are. The alternate, right now, the alternate stands that this would be ABC, but only wave A of minor wave 4. Okay, so this all drops 1 degree. The ABC drops down 1 degree to form minute wave A. And all of this then is an ABC up, and it is minute wave B. So all these degrees got to drop down. It gets really crazy. And then that would be wave B of minor wave 4. And then we're going to drop in a C wave. Now, what could possibly, there's nothing economic data-wise that does come out tomorrow, except leading economic indicators. Boy, they would have to really look bad. They'd have to really be bad. And who knows? Who knows? That may tell the tale, so to speak, when we go and we look at those, that something really is off kilter, and that is inflationary, and that is just another nail into the cross, into the, however you want to call it, of inflation interfering with the Fed's plan to start to cut, and actually puts a cut back on the chopping block, so to speak. So again, technically, what would we look for? Something that's going to jar the market, because it needs to just start breaking back down. Now here would be easy between where we were to getting back below 18,500 because of how we rallied. We rallied, gaining all that steam like in 1 day. So why could it drop in 1 day? Now that keeps it inside of a possible fourth. But what if we come back on Monday and be just going into Memorial Day, they absolutely decimate it because of something else that actually starts to occur with the buildup to the 22nd of May, which of course is then NVIDIA's earnings. What's to say that NVIDIA's earnings won't come out with a little glitch, a little, stick into the spoke, so to speak, and the market just kind of drops. These are just givens, not excuse me, these aren't givens. These are just hypotheses. This is just me talking. But this is an alternate. So how could we get a C wave that would be expected then to drop the market below 17,100? Because this low is 17,113. So we'd be looking for it to drop below that. And where we are, that is 1,500 points from here. That's a lot. All right, 17,100, 18,600. So again, and fast. It would come down fast. A C wave would look like this. And this was 8 days. And this was actually April expiration. So if they could get this started, and maybe it would be that larger 4, and it could come down real quick and get us down into here. That would be a 400-point drop. That still would be a heavy-duty drop if it did it all tomorrow. Now, what it would do is it would set us up perfectly for that was all expiration related, blah, blah, blah. And then the market just turns and goes, okay, we're done. Bam. Immediately off of globex starting on Sunday. We come in on Monday and it's just like buy it and stand back. Why? Well, we got NVIDIA's earnings coming out on the 22nd. And that whole narrative will be right back with us. So again, we do have a larger alternate count, which would suggest a much stronger drop, still within the context of a minor fourth wave. So what would the result be if it did that? You're going to get a minor fifth wave, but we already think we're counting here, and we're going to do it again. And we're going to end up way above these levels, then we're into here, okay? If that's the case, if we still have all of minor 5 to do, alternate case, folks, back here in the reality that I'm leaving open the potential. I'm going to drop down to the 15-minute chart, and that's right here. So there's the 3, here's the 4, that's the PPI response last on Tuesday, and then I'm counting it out. 1, 2, 3, 4, 5 of minuet 5 of minute 3. It's not an easy count. It was a great rally, but it's not an easy count because we get this huge just between Tuesday, Wednesday of just basically sideways, and then we had a number. And yippee, we loved it. And so did the market. So again, PPI, CPI, what came after? So pulling back, we start getting into this, it can drop pretty quickly. So I can't rule out 1.618, 100% sure. And that actually, that is on, I'll show you. Oh, come on. There you go. That's, I put this on as if this was A, B, and now we're forming a C wave, and that C wave would 100% is 18,623. Now we might get there, and if it turns, then I have to go with, oh, we got one more high to go, and then that's what I'm looking for, 18,804. Okay, so that still hangs out there, waiting to be taken out. And so it's there, it's resistance, and it then would be considered a possible stopping point for minute wave 3. I'm definitively not looking for minute wave 4 to be completing here. If anything, I got an ABC and it's wave A. Then I got a B wave and I still got a C wave, and I'm still looking to come into this zone to finish minute wave 4. But should we come in tomorrow morning and we're looking even during the night and we see, well, look what the market has done, is above 18,700 again, then more than likely we're headed up to this level, or at least above that one, which is 18,760. All right, moving averages, they are looking pretty good. I'll go out to that 4-hour chart. I'm going to take a look this way. Still, look how nice. Look how nice. There's the 13 starting to crest. And what I did, folks, I combined the 5 and the 8, call it a 13, because I used to use it in trading, more day trading wise, but I've pulled back, and I think on a longer term chart, starting 4 hours a daily, it's it's usable, but not as much. So I combined it to 13, and I love fib numbers. So we have the 13, the 20, the 50, the 200, all still looking good. Now, the 13 has started to crest, and will start to go flat if this continues to come down. If it gets broken, it'll turn lower. Same here, it'll turn lower. So we have all the scenarios in place. If we stop here, we go back up and look for something that's going to come in above 18,760, maybe as high as 18,800, and then the start of wave 3. Okay, so excuse me, the completion of wave 3, the start of wave 4. And then we still got a 5th wave up. All right, that's going to be it for today. Tomorrow, as I just said, only thing that we got coming out are U.S. leading economic indicators. And they come out at 10 a.m. 10 a.m., folks. So a lot of times they come out that late because nobody's paying attention. And expiration is well taken care of because it's coming out on an expiration Friday. But I think that can be very important. And it could lead to a stronger slide right into the bell. And we do have one Fed governor who will begin speaking right after the U.S. leading economic indicators. Okay, so that's going to be it for this week. My next update, I likely will do it on Friday afternoon/evening. Again, I live in California, so I could start them a little bit later. But they will be more of the weekly. And that's the name change. That's what I'm going to call it. Instead of the big picture technical update, I'm going to call it the weekly technical update for the S&P 500 and the NASDAQ 100. So that I hope to get done tomorrow. Outside of that, the next daily technical update will be on Monday, the 20th of May. Have a great trading day tomorrow and have a great weekend.